Aussie dollar is getting into, let's call it make or break levels, right? So we have long talked about this level at 74.15, and we are finally there. So 74.15 has been reached. This channel, again, you can see the centerline resistance, centerline resistance. We have hit, what's today's low? I think it might be 74.15, 74.17. So we're pretty much there. Again, you've got a ton of stuff there. 2 legs down from the high, 23.6 retrace of the entire rally from March 2020, and the high from September of last year. The lower channel line is about 73.80. So, we're working within a range there. One of two things happens here. You either get a hold on this, right, and get a big reversal, or we're going to break below this, and then we would be looking for the channel to extend, possibly all the way down towards, sub 70. So, again, that would be what I call the slingshot setup, right? So if we do break below this, then you're looking for the underside of that line to provide resistance. So again, you can see how this, the way I look at the markets here, it's not trying to predict anything, right? We're simply looking at setups. We're following the trend lines or following the channels. If we continue to trade within the channel, great. Okay. You need reversal candles to confirm that. But if we break down below that, then you're going to be looking at much more expanded ranges or expanded moves. Okay. So that's that's really the best way I think to think about trading in general is if then type statements, right? If this happens, then I do this. If that happens, then I do this, right? Rather than trying to predict what will happen. Alrighty, another target here for the head and shoulders is down near 71. So you can see too, like this whole area, right? So the 38.2 retrace is 70.50, right? And that's going to be right around there, all those pivots. So that's a good area to kind of focus on. If we do get the breakdown below the channel. All right, let's go to Kiwi. Kiwi is frankly just pissed me off pretty bad. So I was short, had a great entry too on Friday, and then things opened up after the holiday and they just ran stops, I guess, because I had a stop above 71 and high was 71.05, and there we had us stopped out. But in any case, Kiwi not as clear, not as clean, right, as Aussie has been. But downside remains the favored scenario at this point. And again, we are looking at this point at 67.50 to 68. That is going to be the big zone to pay attention to. Again, 67.50 is the 38.2 retrace. It's also high from January 2020. You got resistance here again from last September. That's going to be in line with 68, which is 2 legs down. So we do have a great deal of stuff, if you will, from 67.50 to 68. Okay, that is where my focus lies. So like on a near-term basis, if I wanted it to go and screw around with Kiwi again, even though it screwed me, but that's all right. I'd be looking at like 70.10 or so as the big level to, for resistance. You can see here, well-defined here, right? Center line. So like just above the figure, 70-ish, right? So if you get a bounce today, we start to show some resistance here. It might wade back into Kiwi on the short side near 70. All right. So as you know, or should know, I am working with Scandinavian Capital Markets as the Chief Technical Strategist. We're based in Stockholm. Scandinavian Markets is a market maker, and we are looking for profitable traders to join our ranks. We have clients all over the globe that are looking for more strategies to invest in. So if you are a profitable trader and you would like to get into the money manager world, all goes according to plan and things go well, you can get your, strategy funded with up to $2 million. Okay. So come and show us your skills. To register, go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades.